Welcome back to our market analysis update. In today's video, we're taking a close look at three key markets that have been making waves: the US dollar index, spot gold, and the USD JPY currency pair. With major central banks' decisions on the horizon, including the US Federal Reserve and the Bank of Japan, these markets are showing some intriguing movements. Let's break it all down. First up, let's talk about the US dollar index, which has been in a bit of a holding pattern lately. After the release of US retail sales data for November, the dollar's momentum seems to have been stalled. Despite retail sales coming in slightly above expectations, traders didn't rush to celebrate. As a result, the US dollar index is hovering around the 107 mark, struggling to break above this level. Currently, the index is retreating after a strong rally last week, with mixed economic data and upcoming central bank decisions playing a key role. Chinese economic stimulus and rising US Treasury yields have tempered any significant losses in the dollar. However, last week's consumer price index data showed persistent inflation, which kept markets on edge. Looking ahead, traders are cautious, waiting for clearer signals from the Fed. If the dollar index remains above the 20-day and 9-day moving averages at 106.53 and 106.51, respectively, the short-term outlook remains constructive. However, a break below these levels could signal further weakness. Next, let's take a look at the dollar yen. After a 6-day rally, the dollar has pulled back slightly, but the widening gap between US and Japanese government bond yields may limit the downside for the greenback. The Japanese yen continues to trade lower against the US dollar as markets expect the Bank of Japan to keep interest rates on hold this week. Recent surges in US Treasury yields, along with expectations of hawkish interest rate cuts from the Federal Reserve, have placed additional pressure on the yen. The overall market sentiment is positive, further weighing on demand for the yen as a safe haven asset. Technically, the dollar yen recently broke through the November high of 156.75 to the December low of 148.65, and we saw a key Fibonacci retracement level at 153.65. The pair is showing bullish momentum, with oscillators indicating further potential for upside movement. Traders are likely to focus on the 154 area, which is acting as a key trigger for bullish sentiment. A move above this level could see the dollar yen testing the psychological 155 mark, followed by resistance at 156 and 156.25. Moving on to gold. It's been a relatively quiet week. After a brief recovery attempt earlier, gold remains under moderate bearish pressure, staying below the 2,650 mark. The rising US bond yields and expectations of a less dovish Fed are weighing on gold prices as we approach the final Federal Open Market Committee meeting of the year. Gold prices have fluctuated within a narrow range, with profit taking limiting any significant gains. The market is also cautious ahead of key central bank meetings, including the Fed, the Bank of England, and the Bank of Japan. However, geopolitical risks continue to offer some support to gold prices, and demand from central banks in Asia remains strong. Technically, gold is moving around the opening price with no clear directional bias. The 20-day moving average at $2,655 remains flat, indicating a lack of strong momentum in earlier direction. On the upside, resistance is at the 2,671 to 2,673 area, and a breakout could take us to 2,700 level. If gold breaks below these levels, we could see further downside to the 2,600 level. That wraps up today's market analysis. As always, keep an eye on those central bank decisions as they are likely to drive further volatility across these markets. Make sure to subscribe and hit the notification bell for more updates as we approach the end of the year. Thanks for watching and happy trading.